Good morning. Today is Tuesday, June the 20th. The time right now in Singapore is 3 minutes to 7 in the morning. And overnight, we have observed that US markets are closed for the Juneteenth holiday, which is a brand new holiday enacted into law by President Biden in 2021. And officially today is possibly you can take it that it is the start of the trading week, although overseas markets remains open yesterday, but they were basically quite quiet. Okay, so today we are going to refocus on the US markets again, and we have already seen last weekend leading in most US equity markets continuing to charge into new territory in terms of new highs. In fact, the S&P 500 and the Nasdaq 100 has recorded new 14-month high, although the Dow Jones is on the verge of breaking into a new high. Of course, right now it has not done that yet. So will the market continue to trade higher this week? Let's take a look. Now, in the 4 hours time frame in which you are seeing right now on the chart in front of you, that is the Dow Jones itself, and the Dow Jones is just a whisker away from taking out the year high, which is at 34,712.3. The highest traded on Friday was 34,588.7. So we are just a hairbreadth away from challenging the year high, which was last traded in January of this year. But the market actually closed on a weak note, and that can be understood as because the market is going to a long weekend. So those who have actually bought are eager to pocket some of the gains and take some money off the table before the weekend. So that can be understood. But if this profit taking accelerate to the downside, I think there is a risk that the market may actually pull a bit lower in at least possibly the early part of the tonight's trading in New York. The ideal level for the market to pull back, in my opinion, is 33,824 to 34,116. That level actually represents a 23% pullback to at most a 38% pullback of the most recent rally from 32,586. So if that's the case, I think the market may have enough momentum to actually try to take out the year high, which I last mentioned was 34,712. So this could actually set the stage for possibly the market going up to challenge the April 2022 high at 35,492.2. So that remains a possibility, but there is also the possibility the market may have already decided enough of this rally. Maybe it's best to actually take more profit off the table, and that could cause the market to actually reverse. Although right now we don't have any sign that the market is about to reverse just yet, but the possibility is always there. In the S&P 500, we also saw earlier on, I mentioned the market has gone to a new 14-month high, and the high traded on Friday was 4,448.5, and this price is actually within the bracket of prices, which I think the market may be vulnerable to the downside. And that level is 4,426.3 to 4,517.1. That level represents an area of vulnerability, in my opinion. And if we do see a pullback, that's very possible that the market may come back and retest the most recent low at 4,337.85. So if that's the case, maybe that will be the same thing as per the Dow Jones outlook. Maybe the market will actually do one more rally beyond the 4,448.5 levels. So let's see whether that actually pans out. In the Nasdaq 100, of course, this market has been leading the charge higher all the while this year, and the high traded so far, brand new high for the year is 15,284.65 before it closes on a slightly weaker note. And if we do see a pullback, ideal level to see this pullback will be somewhere between 13,906 to 14,428.5. So this area will be a great levels to actually consider taking up more long position if you are of the opinion that the market have enough to go on beyond the 15,284.65 that we have seen so far. So this is the target area. The target area is 15,270.86 to 16,115. So again, this is where we are right now. The market incidentally has taken out the last March high at 15,265.4. Okay, so do watch out for the possibility of a pullback before the market rally one more time, and do watch out as the market go ever higher. The market is very vulnerable to very aggressive profit taking going forward. Of course, Now let's put our attention to Asia. We can see the Nikkei actually registered a new high for the year at 33,772.9 overnight, and this is where we are right now. If the Wall Street actually see a pullback, we may also see the same thing happening in the Nikkei, because the Nikkei has been on a tear of late and it has gone up by the most as far as the G7 economies are concerned. This is about the only equity markets in the G7 economy that has actually shown to have fundamentals behind it, because lately we can see that growth are coming back to the Japanese economy, and that is on a relative basis, of course. And if we do see a pullback, the area of possible support lies possibly within the 31,000 to 32,000 levels. So do watch out for this possibility of a pullback, maybe to challenge the most recent low at 31,420. Okay, over in Hong Kong, we can see that the Hang Seng Index has actually gone much higher beyond the 20,000 levels for the first 20,000 levels for the first time since May, and the high traded on last Friday was 30,155.9, and overnight we can see that the price did not continue higher northwards because there is a pivot point here which I have underlined in blue, and this line is 20,286.5. So the market has previously had difficulty crossing this level, and this time around it does seem that it is also having the same impact. Let's see whether later on in the week the market will actually take out this level. If it does, then the market have a good chance of challenging the much higher at 21,005. But in the meantime, if we see a pullback, the pullback may actually give us a chance to buy on the dip here, and the level here ideally will be 19,100 to 19,350 levels, which will offer us a 50% pullback, and that may actually set the stage for another assault towards the March high of 21,000. Over in the mainland Chinese equity index, the CSI 300, we can see prices actually rallied just under the 4,000 levels and then stop at 3,967.9 before it sees a pullback yesterday. And this level has been highlighted previously as an area of potential profit taking, and the level is 3,937.1 to 39,073.9. So we did see a pullback yesterday. Will this pullback result in an extended pullback? So if it does, then the next level to actually consolidate before the market extend higher is somewhere between 3,870 to 3,974. So this area will be a good area to pick up some more long position, because it does look like the market may have enough momentum to actually go even higher beyond the 4,000 level this time. Over in energy markets, we can see that the crude oil prices has actually ramped past the $70 per barrel, and that is a positive development. And that's the overnight high is $72.22, and this will lay the groundwork for further extension in the price of crude oil. In particularly, we are talking about the West Texas Intermediate Crude, or the WTI for short. So if we do see a pullback, ideally between $69.50 to $69 or even $70, that area will be a good levels to pick up some more long, because this market does looks like it have enough to actually challenge the much high here of $74.70 and perhaps even higher towards the $80 per barrel target here. Okay. And over in precious metals, we can see precious metal has actually pulled back yesterday since hitting a marginal, hitting a pocket of resistance at 1,967, just under $1,968 per ounce. And we did see a pullback, but this market does looks like it may have enough to go higher, just marginally beyond to test, or basically to test $1,983.50, which was last traded on June the 2nd. And if that's the case, this area actually represents an area of selling opportunity, in my opinion, and that area is $1,976.40 to $1,988.50 thereabout, and that should see the market coming back down to test the 1900 levels. So this is actually setting up to be a long-term buying opportunity. If that appears, do look out for that possibility here. I have an outlier here. this obviously may be a little bit too pessimistic, but if the market ever dip below $1,900, that would be an excellent buy in my opinion, because I do expect gold prices to stabilize sometime this month before we see a robust rally going into July. Okay, so do watch out for buying opportunity in both the gold and silver. In silver market, we can see that the silver has actually gone higher to $24.21. Wow. On Friday itself, we see a bit of a pullback here, and most likely the silver will be trading independent of gold. I think it may actually extend higher to $25 to $25.50 thereabout before we see a pullback. However, the timing is crucial here. If this market rally into $25 area towards the end of the month, do not attempt to sell this, because that could represent an extension of this entire rally here for $22.68. However, if the market actually rally into this pocket of prices this week, leaving us another week before the month end, then maybe there's a good opportunity here to sell. But in the meantime, be very careful selling silver. If you have to sell, I would suggest maybe sell gold is better bet than sell silver, because silver appears to be a lot firmer than gold right now. In currencies, we can see that the dollar basically has been coming off very aggressively, largely due to the fact that the Federal Reserve has actually paused its interest rate cycle, whereas the other major currencies, including the Reserve Bank of Australia, the Bank of Canada, the ECB, and possibly this week, we probably will see the Bank of England or hiking interest rate, and that will put the dollar on the back foot, meaning to say the dollar will be under pressure to come off again. So in the meantime, we see a little bit of a rebound in the dollar index of a low of 101.58 on Friday, and if this market can actually go up a little bit more, ideally into 102.20 to 102.65 levels, that will present a selling opportunity, because I do believe this structure that we are seeing for all the way from a high of 104.61 appears to be a five-wave structure, and we are right now possibly making a fourth wave high. And if that's the case, we possibly will see another dip below 101.58, possibly to challenge the 100 levels that we have seen at the beginning of last month. Okay, so do watch out for extended loss in the dollar. And over in the euro dollars, we can see as the dollar pulls back, the other currencies manage to rally. And in the euro dollar, we can see euro dollar came to 109.70 on Friday before it on Thursday, on Friday, and then it pulls back. And if we see extended pullback, ideally to 108.55 to 108.90, that level will present us a buying opportunity. Very similar to the dollar index, I do expect another rally beyond 109.70, perhaps to 111. Okay, the high here previously was 110.92, so maybe that will be a obvious target for the market to gun for. Okay, over in the sterling, just remember tomorrow we have the release of the UK CPI numbers, and sterling has been particularly strong this month, even stronger than the euro dollar. The high traded on Friday was 128.50. Now we see a bit of a pullback. If the market continue to pull back even further, ideal level to buy will be 126.70 to 127.40 levels, because very similar to the euro versus the dollar, I do see a potential five-wave rally here. Right now we are possibly making a fourth-wave pullback, and if that's the case, then a rally beyond 128.50 is a given, and ideal target will be 130 even. Okay, in the Aussie, we can see Aussie has also extended very much, all the way to just under 69 cents. And this pullback, if there's going to be a pullback, may result in a much deeper correction. But in the meantime, the momentum does suggest that if we do have a break of the nearby support resistance here, representing by this line over here, then possibly we could see another rally into the 0.6930 to 0.6980 levels. So this will be a much better level to sell if you are of the opinion that you have already bought and you want to take profit. This area will be a perfect area to take some money off the table. Okay, and over in the dollar versus Canadian, we can see the Canadian, this chart here fully represents the problem with the dollar itself. We have already seen a five-wave pullback that has possibly already completed at 131.77 on Friday. What it means is that we probably will see a technical rebound back to 133.80 levels. So if this is the case, I would love to see a three-wave rally here. And if it is in the structure of a corrective rally, then the 133.85 levels will represent the top target of this move here. Okay. In dollar yen has particularly broken out of its previous resistance here and has charged into just under 142 in the dollar versus the yen rate. And this level right now is getting to be quite interesting because somewhere between 141.63 to 143.55, a very wide range here. We're talking about a 200 pip range here. The market could actually find a top here. So unlike the dollar rates that have gone down, the dollar versus the yen has actually gone back up, and largely due to the weakness of the Japanese yen, not so much the strength of the dollar, because we also know that the Bank of Japan last week has basically left its monetary policy unchanged, and it has been unchanged since 2016. It is currently at negative 0.1. So when you consider negative 0.1 when all the other major interest rate has actually gone even higher, you can see why the yen is weak. And the yen is weak because its interest rate is still stuck in negative territory. Okay, so it will definitely not allow the yen to rise under these circumstances. Okay, so over in the Bitcoin, we can see the Bitcoin actually has caught a bit of a wind lately. We can see that overnight the market actually punched back up above $27,000 from a low of 24,756 last Thursday, and just before BlackRock announced that it is filing for an application for a spot BTC ETF. So that is actually giving the market right now the confidence to take the cryptocurrencies higher, and we can see Bitcoin has actually benefited from this move. Now remember, just 2 weeks ago, the SEC, which is the Security Exchange Commission, had sued both Binance and Coinbase, and that has put a wet blanket on prices, and you have seen prices go all the way to 24,756 before this latest news about BlackRock caused the market to rally. So will the market continue to rally? I think there's a very good chance, and if we do get a pullback, ideally somewhere between 25,600 to 25,900, that will be your last call to buy, because I think the market is getting ready to rally, because we have seen this pattern many times. We have the big boys coming to muscle into this space here, and of course the narrative will be, oh, everything's bad about crypto and prices got slammed down. And I would not dismiss the idea that the SEC is working hand in glove with BlackRock to actually cause the market to come off. And now the market has come off. BlackRock just announced this surprise news that they are applying for an ETF. Now, if BlackRock is in the market, it will be monumental, because BlackRock is, after all, the largest asset manager in the world, and they are using Coinbase. Now, remember, Coinbase has been sued by SEC, and now BlackRock is using Coinbase as custodian. So this all put together means we are likely to see even higher prices going forward. Watch this space. In the meantime, you take care, and I'll come back to you with another update tomorrow. Bye-bye. Take care.